Welcome back to Yahoo Finance Live. It is a big day for Tesla as it begins another 3-for-1 stock split. Elon Musk's group enacting the split by paying a stock dividend of 2 shares for each share held after the close of trading yesterday. For more on that, let's bring in Yahoo Finance's Ines Ferré. And Ines, we are seeing the stock down, though, about almost 1.5%.
Yeah, that's right. It was earlier. When it first opened, it was up about 2%, and now it's dipped. A difference in what you see with stock splits than when we were watching stock splits back in 2020 during the pandemic, because Tesla had split its shares back in August of 2020. And what's interesting is that when that announcement had been made, the shares had soared 60% up to that split. Now you had this announcement of the intention to split back in March, and shares are down 12% since March. Now, a lot has happened. You've also had the June lows, and Tesla shares have rallied off of those lows. But year to date, the stock is down 25%. But it just goes to show you that in a bull market, the reaction to stock splits are different, even though there's really no change. I mean, you're not changing the value. Yesterday's shares were trading at around $900. Today, they're trading at around $300. That's a 3-for-1 split on an adjusted basis. But nevertheless, it's a kind of different reaction that we're watching with these stock splits this year.
Yeah, a lot of people, if they didn't know it, looking at the price today saying, what happened to Tesla? Let's talk about another stock you're watching today, Dollar Tree. That stock is down more than 8%. It's an interesting story because you think that with inflation, a lot of people are trading down, maybe going more into Dollar Tree, but you're saying the storyline we're hearing from the company is sort of similar to other retailers.
That's right. The lower income consumer is getting squeezed. That is the bottom line when it comes to Dollar Tree. What they are doing is they're cutting their full year profit outlook. They said that they are seeing heightened focus on needs-based consumable products. That means that people are buying food, and those have lower margins, or they're razor-thin margins in some cases, compared to the higher margin discretionary items. And we've seen this kind of commentary before too, also with Walmart. Now, another thing that Dollar Tree is, they're going to be lowering their prices at the Family Dollar chain. So they've got this bifurcated strategy with the Family Dollar and the Dollar Trees. You've got the Dollar Trees that they increase prices to $125. But some interesting commentary, Dollar Tree says that new customers have family incomes over $80,000. And also that they're seeing customers shift to credit from cash. Again, the consumer getting squeezed, and especially the consumer on the lower income scale, they are getting squeezed. The affluent consumers are holding up more. You had Williams-Sonoma reporting its quarterly results yesterday, and they did well. So it's a different story when it comes to these lower income consumers because they are spending on food and gas.
Yeah, we've heard a lot of retailers talk about this switch from credit to cash or cash to credit, that they are sort of trying to
exactly, and it just shows you the shift that they are that people are struggling to make their dollars stretch. And the fact that we have seen these dollar stores, foot traffic going into these more of these dollar stores, so they've done well, but they are showing you that there are signs of stress.